Federal Bank also came out with good set of numbers. They've reported a profit growth of 40% for the quarter gone by. We are now joined by the Chief Executive Officer and Managing Director of the bank, Mr. Shyam Srinivasan. Shyam, afternoon to you. Thank you for joining us. Good solid growth in a tough environment. So what were the key drivers behind this 40% growth?
Yeah, we are very encouraged and quite excited as a team at the outcome. Q3 focus was primarily on three things, and we seem quite confident that we've delivered in challenging environment. Firstly was to ensure that we are sensibly managing our net interest margin, which we seem to have come out with good outcomes. Second is an heightened focus on fee income, which also we have seen encouraging outcomes. And the third is to focus on some of these stress areas on the portfolio, particularly on retail and SME. And like all of us know, the environment is challenging, but we've had good outcomes. So overall, our profit growth year on year is 41%, and we've maintained all our capital ratios, protected our overall cost income to ensure that our spending is always in tune with our income growth. And in this quarter, you may be aware, we had a very exceptional branch launch. We opened 66 branches on one day, so our expansion plans are very much on track.
Afternoon, Mr. Srinivasan. Your net interest income is higher by 18% on a year-on-year basis. What's the outlook going forward in terms of your NII growth?
Interest income, as you know, has moved to 1,466.83. So it's been a very handsome growth. Other income also has registered a good growth of almost 14% compared to the previous quarter last year, driven largely by our FX initiatives and our treasury related activities. So other income is beginning to show trajectory. Interest income has been an area of strength for the bank always. We've been able to manage both our yield on advances, as also handle some of the increase in deposit costs, ensuring that the overall spread has been consistently good, and that's resulted in a higher interest income growth.
Fair points. Shams, at a time when cost of capital is moving up, Indian economy is slowing down, credit offtake is also taking a knock. Are you confident of maintaining your NIMs, net interest margins?
NIM is an outcome of partly what's happening in the market and partly how we manage our overall portfolio. We have focused in this quarter particularly to ensure that our overall NIMs are, like I said, sensibly managed. We don't want to pass on everything to client and burden the customer. So it's been a combination of running down some of our high cost deposits, planning in such a way that our average assets are growing, and therefore going after products that are where there's a consumer demand, particularly on the retail side, say in gold loan, which has grown very handsomely, as you would notice. And lastly is wherever there has been a base rate increase, we have passed that on selectively to clients. So a combination of these three things have ensured our NIMs have been handled, and our guidance all through has been that the NIMs for the year will be in the 375-380 range, but going into FY13 that may see some pressure, but for now our guidance we hold on. We will be in the zone of 375 to 380.